Let's discuss the sources of credit in India. Two categories of sources of credit are formal sector credit and informal sector credit. The formal sector comprises banks and cooperative societies. The informal sector may consist of money lenders, friends and relatives, traders, landowners, and large farmers. Here is the graph. You can see the sources of credit per 1000 of rural households in India in 2012. Total 44% of the credit is taken from informal sources till 2012, whereas 56% credit is taken from formal sources. This means that still many people in our country are dependent on informal sources of credit. Features of the formal sources of credit. Formal sources provide loans comparatively at a lower rate and collateral security is required to obtain loans. This sector is mainly supervised by Reserve Bank of India. It includes banks and cooperatives. RBI has a major role in providing formal sector credit. It ensures that the banks give loans not just to profit-making business and traders but also to small cultivators, small-scale industries and small borrowers. Periodically, banks have to submit information to the RBI on how much they are lending, to whom and at what interest rate. The banks maintain a minimum cash balance out of the deposits they receive. RBI monitors the banks in actually maintaining cash balance. Informal sources charges higher interest rate on its loans as there is no organization to supervise this sector. Collateral security is not required to obtain the loan. But higher rate of interest leads to increasing debt and the borrower can fall into a debt trap. Let's work these out. Name two formal and two informal sources of credit in India. Next, why do we need to expand the formal sources of credit in India? Which government body supervises the functioning of formal sources of loans in India?